Hello, everyone. Welcome, and thanks for joining today's webinar focused on the new Farm Financial Calendar tool from the CARET project. This webinar is being hosted today by New Entry Sustainable Farming Project and the CARET project, and made possible by generous support from the Northeast Extension Risk Management Education Center, as well as Northeast SARE. Hopefully you guys can all see my presentation. So our webinar today is going to run about 1 hour. We're going to start with a quick technical orientation and a brief introduction of New Entry Sustainable Farming Projects and the CARET project's mission and programs. And then we're going to introduce today's presenters briefly. Then we'll dive into the meat of the webinar, starting with an overview of the financial calendar tool. Hopefully you guys all have it printed out and in front of you so you can view it at the same time as the webinar. We'll explain the purpose of the tool, how the checklist is structured, and kind of the way to use it and view it. Then we'll dive into several of the tasks on the calendar itself, explain how to do them, when to do them, and the nitty-gritty of what it all means. And then we're finally going to hear some great examples from a local farmer, Dan Berube, today on his financial management system and what days of the week he does certain tasks and why, how he finds time to do them, how he coordinates with everything else going on in the busy farm season. And then we'll finish things off with a question and answer session for both Julia and for Dan. And feel free to ask questions around how you can adapt the calendar tool to your own needs. So let's start with a really quick technical orientation so we're all on the same page. The most important thing you need to know for today for the webinar is that the chat window is how you can communicate with other participants as well as me, the host. So as your questions arise during the webinar, please send them to me in your chat window. My name is Noelle A. Fogg. And I will address them and bring them up to Dan and or Julia as they are relevant during the webinar. Also, please note that everybody is automatically muted upon entry to the webinar to reduce background noise and interruptions. So please do not unmute yourself unless you are a presenter. Thank you very much. To access the chat window during the webinar, if you choose to make it a full screen, you can hover your mouse at the top of your screen to view the share window. And this is where you can click on the chat icon to access the chat window, and you can click on the participants icon to view the participant list. To resize the share window, just select the down arrow on the right side of the menu and go to View. After today's webinar, likely within a day or two, all participants and registrants are going to receive an email from me with a link to a brief follow-up evaluation, as well as a link to the recorded version of the webinar. So we would really appreciate if you would take just a few minutes to fill out the follow-up evaluation, as it always helps us improve our programming for you in the future. We absolutely want to hear your honest and candid feedback. So that's all for the technology orientation. I'd like to introduce the co-host of the webinar today, the CARET project. Dorothy Suput, founder and executive director of the CARET project, is here with us today. Dorothy, would you like to say a few words about the Making It Happen project that led to this financial calendar tool that we're discussing today?
Sure. Thank you, Noelle. And hello, everybody. I'm thrilled to be here and to have the opportunity to help introduce the calendar. Before I do that, though, I'll just tell you a tiny bit about the CARET project. The CARET project is a nonprofit organization that works to increase the number of profitable and successful farms and food processors in New England and the Hudson Valley. We do our work through direct services such as business assistance and financing, trainings and webinars, and use our 10 years of experience to strengthen the sector by helping others do the same. In 2015, we reached over 1,200 agricultural businesses. This webinar is a result of a research project called Measuring Profitability and Success, where we partnered with UVM, Cooperative Extension, Coastal Enterprises, or CEI, Julia Shanks Food Consulting, the Maine Organic Farmers and Gardeners Association, and North 30, which is a consulting company. The goal of the project was to better understand what contributed to profitability profitability and success for small and medium-sized farms. We provided business advice and financing to 23 farms over 2 years and tracked the qualitative and quantitative changes on the farm. While many factors were important influencers, developing and using financial management skills was critical to those farms that had the most success in meeting their business goals. As a result, we piloted a training this past winter called Making It Happen, Profitability and Success. The goal of the training was to increase financial management skills of participants and their ability to apply those skills to their business. Feedback from participants led to this calendar tool, which we are introducing today. Its purpose is to help you manage your farm business by providing guidelines about why you'd want to do certain financial tasks, when to do them, what you'll need to do so, and the steps required. I'm grateful to the USDA's Northeast SARE that funded all of this work and New Entry, and USDA Northeast Education, Risk Management, and Education. And I'm also for you for the opportunity to introduce the calendar and to get your feedback, which we look forward to. And with that, thank you for your time and attention this afternoon, I guess, and I'll hand it back over to Noelle. Thank you.
Thank you, Dorothy. So I'm just going to tell you really briefly about New Entry, since we are the host of today's webinar. New Entry Sustainable Farming Project is a nonprofit organization also based in the Northeast. We are based in Lowell, Massachusetts. We were founded in 1998, and our mission is to improve our local and regional food systems by training the next generation of farmers. So we help them produce food that is sustainable, nutritious, and culturally appropriate, and help make this food accessible to individuals regardless of age, mobility, ethnicity, or socioeconomic status. So in doing this work, we provide many different programs, including critical training, career development, and economic opportunity for new farmers. Some of our programs include our farm business planning course, a farm training and incubator program, and a World Peace CSA that distributes around the Boston area and aggregates from multiple farmers in the area. I also run our farmland matching service, which is another piece of what we do. So we offer a lot of different webinars and workshops, et cetera, on our website, and we're very happy to be partnering with the Carrot Project in offering this tool today. So without further ado, I'd like to introduce today's presenters. First, we have Julia Shanks. Julia is a Cambridge-based chef and entrepreneur who consults with food businesses and farms, preparing them for growth through business and cash flow planning and financial feasibility studies. She's a longtime partner of the Carrot Project in New Entry, and her clients include Mother Earth Produce, Guinea Dip Farm, the Massachusetts Department of Agricultural Resources, and City Growers. She lectures on sustainable food systems and small business accounting, sits on the advisory board of Future Chefs, and is the regional leader of Slow Money Boston. Julia is the co-author of the Farmer's Market Cookbook and the very soon to be released The Farmer's Office. An awesome book, you should all check it out. We also have Dan Berube with us today. Dan Berube grew up in Dracut, Massachusetts, and is a graduate of Dracut High School, UMass Lowell, and Bentley University with an MBA in management. He is the owner and operator of Berube Farm, LLC, which he started in 2014 after graduating from New Entry's Farm Business Planning course. Berube Farm sells a wide variety of vegetables through its CSA and to New Entry's World Peas Food Hub. So without further ado, I'm going to turn it over to Julia to get us started today.
Awesome. Thank you, Noelle, and thank you for having me, New Entry and the Carrot Project. So before I get started on my presentation, I just wanted to put out there that all the numbers that I'm going to provide today are fictitious and for illustrative purposes only, and as you plan your own business financials, you'll need to come up with your own numbers that are based on your economic reality. So for the presentation today, I'm just going to do a quick overview about why even bother with the financial calendar, and then we'll get into an overview of the calendar in terms of its formatting and concepts, and then we'll go into some specific tasks on the calendar so you can better understand how to use it. So why bother? Well, I'm sure you've had it hammered into you a few times that you need to do regular bookkeeping so you can file your taxes. Well, the real benefit of regular bookkeeping is that you have numbers to make good business decisions. And with these numbers, you can better manage cash flow, you can better grow your business. But part of the challenge, of course, is having a regular schedule to get everything done. So one of the reasons why we put this calendar together is that you have a system in place, an understanding of the system that you need for the regular tasks of bookkeeping and making managerial decisions. So the calendar is put together into two tools. We have the checklist, which I'm going to go over in a minute, and then we also have a more detailed description of various different tasks on the checklist. Oh my, the animation in this is not set up properly. That's kind of a bummer. Well, if you can sort of focus your attention on the daily, weekly, or biweekly, annually, and monthly, quarterly, you'll see that the different tasks that you need to do are broken up by how often you should do them. So obviously some tasks you need to do daily, some weekly or biweekly, some monthly or quarterly, and some are done annually. And with the tasks that are monthly or quarterly, weekly or biweekly, it really depends on the volume that you do in your business. How large is your business? How many transactions do you have every day, every week, every month? The less transactions you have, the less often you need to do things. And of course, some times of year are going to be slower than other times of year. During the high season, you actually need to do things more often, which may feel counterintuitive because you're so busy with everything else. How do you manage even more tasks to do? But the only way to really stay up on the accounting and finance tasks is to do them more regularly. And the more regularly you do them, the less onerous they become. So it's easier to manage. You'll also see that the tasks are divided up into operational tasks and managerial tasks. Can you guys see my mouse moving over the screen, so if I point to things?
No, we can't, unfortunately. Sorry about that. And sorry about the animations.
That's okay. I was just hoping if I could use the mouse, and at least I could kind of get through the clutter. Any rate, that's okay. Well, hopefully you can see that there are operational tasks and managerial tasks. Now, the operational tasks are the day-to-day tasks. They don't require a lot of brain power, a lot of thinking. Anybody can do them, really, but they just got to get done. But the real value in the operational tasks is that they build up to the managerial tasks. So as an example, you'll see under daily operational tasks, you need to record revenue and expenses into your accounting software. And if you record your revenue and expenses into your accounting software, that gives you the ability to monitor your cash balances, which is a weekly and biweekly task. And it also gives you the tools that you need to review your sales and expenses and compare them to projections. The next part of the calendar tool is the more detailed task list. And you'll see some numbers down the list here, 1 and 2. This is the first page of it. And if you look back at the checklist, you'll see that some of these tasks have numbers in parentheses. So if you look in the weekly and biweekly column under managerial tasks, the first thing there is monitor cash balances, and there is a 1 next to that. And that 1 corresponds to the first task here. So this task detail helps you with a more involved task in what you need to do, why you need to do it, and how you need to get it done. So the task is in the first column, which corresponds to the task on the checklist, the goal, why you need to do it. And sometimes it can feel overwhelming to have all these things to do if you don't know why. So we wanted to give you some background in why it's important to do all these tasks. The third column are the tools and data that you need, and then the fourth column outlines the process you need to do to get the task done. So what do you need to do to get started? Well, the first thing you need to do really is to have monthly cash flow projections. So today is April 28th, and the growing season isn't quite in full force, although I know you probably feel very busy already. But if you can swing some cash flow projections, that'll really help you moving forward. And the Carrot Project has some templates on their website, and I think Noelle will send out the links, the live links after the webinar. If you don't have cash flow projections, or if you're a new farmer, I urge you to just put something together, because then you'll have a resource by which you can compare your actuals to projections. You have something to measure in terms of how you're doing. The second thing that you need is a mechanism for tracking your revenue and your expenses. I'm a big fan of QuickBooks. If you don't already have QuickBooks and you want to get set up in QuickBooks, the Carrot Project has some webinars up on their website. It's also great if you just need a tutorial or refresher. I know that for a lot of small and beginning farmers, Excel works just fine for them, and they're not ready to take on that cumbersome software of QuickBooks, which really isn't so cumbersome. But nonetheless, if you prefer Excel, Excel is fine. I have a template on my website which will help you organize and sort through all the different sales and expenses that you have. The third thing you need to do to get started is to just actually put things in your calendar. I personally set up appointments in my calendar. I set up a reminder for 10 minutes in advance, or maybe you want to set up a reminder for 2 hours in advance. And when you put these reminders in your calendar, set up these appointments, you want to think about really what time of day is good for you. Now, 10 a.m. is not a good time probably because you're out in the field, you're harvesting, you're weeding, you're selling, you're marketing, you're managing your staff, you're doing all sorts of things. So 10 a.m. really isn't a realistic time probably for most farmers. Similarly, 10 p.m. is not a realistic time either because you're exhausted at the end of the day, and if you aren't already in bed, you're pretty darn near close. Probably a really good time for you is maybe 5 o'clock at the end of the day when you're unwinding, maybe having yourself a drink, or in the beginning of the day at 5 or 6 in the morning when you're having your first cup of coffee. Those are the times that you want to think about putting these reminders in your calendar. So just to review the tool, it's in two parts. It's the checklist, which you can print out, maybe put up on your office wall or put up in the barn in the packing room, just to remind you. And then there's the table of tasks, which is the more detailed overview of the different tasks in the checklist. You'll want to think about the tasks in terms of managerial or operational tasks. And then in terms of making it work best for you, think about the timing, whether you need to do everything on a more regular basis or less frequent basis. Get yourself set up in a good bookkeeping system, and obviously you need to make the time and set up reminders for yourself. So the first task I want to go into more detail on is how to monitor cash flow. Now you'll see that this task is under the weekly or biweekly category, and it's the first of the managerial tasks. And as you see, there's a number 1 next to it, and that will refer to the more detailed task list. Now on the more detailed task list, you'll see here again the 4 columns. You have the task, which is monitor cash balance. And the goal of this task is really to make sure you have enough cash in the bank to pay for your upcoming bills. You don't want to bounce any checks. If you do, you're going to incur all sorts of fees and fines and penalties, which really doesn't do much to help cash flow. And if you don't have enough cash in the bank to pay your bills, then you're going to need to prioritize. The tools and data that you need are listed here, and I'll go into more detail on that in the next couple of slides, as well as the process that you need to go through. And again, I'll go through that in the next couple of slides. So again, the goal of monitoring your cash is to maintain a positive cash balance in your bank and avoid any late fees or bounce check fees. You'll need to have your current bank balance, an estimate of all the cash coming in, and an estimate of all the cash that will be going out, and that could be in the form of the bills that are due or any sort of additional expenses. So where do all these numbers come from? Well, your bank balance, you can go online and look at your bank balance to see it there. I do want to caution you to be careful about relying on your bank balance in your online account because there may be some outstanding checks. So as an example, let's say payroll was yesterday and you're today doing the task of monitoring your cash balance. If you sent out all these checks yesterday, not all of them may be cashed. So whatever your bank balance says online may be artificially high because you've got a lot of outstanding checks. It's better to look at your QuickBooks register. If you've been doing a good job of entering in all your transactions, that should be a pretty accurate accounting. Similarly, you can keep an old-fashioned check register to make sure you're on top of your actual cash balance. The second thing you need is understanding of what bills you have to pay that week. So these are the bills that you have coming in. It could be your phone bill, your electric bill. So it's a good idea to keep them in one place so that when it comes time to pay your bills each week and monitor your cash balance, you know where to go. If you're using QuickBooks, it will be recorded in your accounts payable section. And also looking at your calendar. At the end of the month, you may know, even if you don't have a bill, that your rent is due, that your loan payments are due, that payroll is coming up. So you may have expenses coming up that you know about that you don't actually have a bill for. So you want to take all these expenses that you have coming up and detail them out and add them up. The third thing you need to do is anticipate your cash coming in. So you may have cash flow projections that you did to get set up. You can also look at your calendar to know, for example, that you've got a farmer's market coming up next week and you anticipate, let's say, $1,000 coming in. Or maybe you made a few wholesale orders and you expect the checks to come in from those, or you expect a few checks to come in from your CSA subscribers. So make a list of all the cash that you expect to come in based on what you know from the calendar and from your projections. Now that you have those three numbers, you can do a little bit of quick math. And here's an example of a farmer that had a beginning bank balance of $4,000. She anticipated that she'd have about $1,300 in bills due that week. Another payment, let's say her rent was $750. She expected some cash to be coming in from farmers markets. And when you take your beginning balance, subtract the bills and other cash outflows expected, add the anticipated cash inflow, you have an available cash balance. So that's going to be what's left at the end. In this example, the farmer has over $4,000 left, so she can pay her bills with confidence that she's probably not going to bounce any checks. On the other hand, it may not look so good. Let's say, for example, that it's the end of the month and this farmer knows that in addition to, having the rent expense, she also has her debt payments, her loan repayments. She knows payroll is due. She could have a whole bunch of other expenses coming up this week. And with the expected cash inflow of the couple of farmers markets, she's not going to have enough cash available to make all of her bill payments and not bounce any checks. So this is when you need to start making some decisions. Now, the most obvious, easy one is to figure out how you can hustle some extra cash. And maybe that's harvesting a few extra cases of mesclun or tomatoes, trying to sell a few more orders. It may be pushing your CSA to get subscribers to sign up and pay. On the flip side, what can you do to delay any payments so that you don't bounce checks? So if some of your vendors, let's say your seed supplier is a good friend or you've worked with them for a long time, they may be willing to, delay the due payment by a week or so until you have a better balance of cash. So knowing that you will not have enough cash gives you the ability to make decisions and make adjustments before it becomes a problem. So does anybody have any quick questions about that tool before we run into the next one?
I haven't gotten any questions yet. Folks, just a reminder to send any questions you have via the chat window to me, Noelle A. Fogg, when you have them, and I'll pass them on. But I think you can go ahead and continue, Julia.
Okay, great. Thank you. All right, so the next one we're going to do is compare actuals to projections, and what I call projections, QuickBooks calls budget. So for the purposes of this presentation, they're going to be interchangeable. So on the checklist, you can see it under the monthly or quarterly, and it's under managerial tasks. And we're actually going to combine two of these managerial tasks. We're going to combine review sales, compare projections against actuals, and review expenses, compare projections against actuals. And you can see next to these two tasks the number 5 and 6, and those will correspond to the more detailed listing of tasks. Here we have 5 and 6. We have the task review sales, compare projections against actuals. And the goal of these two tasks is to make sure that your business is on target. First, you want to make sure your sales are on target, because presumably when you did your cash flow projections at the beginning of the year and you set your sales goals and you set your expense targets, you set up a plan that was going to help you, that was going to keep you cash positive for the entire year. So by monitoring your sales and your expenses on a regular basis, you can make sure you're on track and make sure that, anything that changes this month doesn't negatively impact future months. So for example, when you monitor cash, you may see that you have enough cash to pay your bills, but if your projections are off, you may run into trouble down the line in a few months. So the goal is to make sure that you're on track, and if you aren't on track, figure out what you need to do to adjust and stay on track. The tools and data you need is in the third column, and we'll go into more detail in that in the next few slides, as well as the process, which is in the fourth column. So the tools and data, where do they come from? So the cash flow projections, which you created in the beginning of the season. Again, a reminder, here's the spreadsheet template on the Carrot Project website, and now you're starting to see the value of having projections going into the growing season. So where do the sales numbers come from? If you're keeping your records in QuickBooks, you can run a profit and loss statement for the month or the period that you're looking at. If you're looking at it on a monthly basis, you want to run a profit and loss for the month. If you're looking at it on a quarterly basis, you want to look at it on a quarterly basis. If you're using Excel to track your revenue, then you'll want to go to your Excel spreadsheet and total up the sales figures for that said period. Similarly, you want to get the expense report from either QuickBooks by running that same profit and loss statement, or by going to your Excel spreadsheet and totaling up all your expenses for that period. Now, no matter how you get those numbers, it's helpful to put them into Excel because it makes it easier to manipulate the numbers and especially look at them as a percentage of sales. And we'll get into that in the next slide, why that's important. So here's an example of comparing actuals to projections. So you can see in this case that the budgeted revenue for this month for this farmer was $80,000, and they did $92,000 instead. So their sales exceeded their projections by 14%, which is awesome. If I were them, I would want to figure out what I did to exceed my projections and how can I replicate that. Alternatively, if the projections had not been as good as the budget, or I'm sorry, if the actuals had not been as good as the budget or the projections, I'd want to understand what went wrong, because I want to avoid that again. If it was weather, if you lost a client, a regular wholesale client, did you have crop failure, something, what happened that you can avoid and compensate for in coming months? Now, the reason why it's important to look at your expenses as a percentage of sales, this example is a really good one. You can see that their cost of goods sold, this farmer must have been purchasing in some products, their cost of goods sold as a raw number was over their projections. But because their sales were also over projections, that means that it's hard to really compare if they're actually over budget or under budget. So by looking at the cost of goods sold as a percentage, we can see, in fact, they did better than projections. They had projected a 68% cost of goods sold, when in fact they did 62%. And you can see that the percent difference column, that the green shows that it's good, and the red shows not good, but the not good over budget is deceptive. Similarly, we're going to want to compare our actuals to projections in terms of expenses. So it looks like this farmer is rocking it in every place except for auto repairs. They were under budget in all categories. Auto repairs, they were 3 times over their budget, which is going to be a problem. So $1,500 over budget once, not a big deal. Hopefully the farmer built in enough of a cushion that he or she can absorb that. But it certainly is a lot, and you certainly don't want to repeat it. Now, auto repairs is one of those things that it's kind of hard to avoid. If you're over budget, it's not like you can avoid fixing the brakes on your delivery truck. If you need new brakes, you need new brakes. So knowing that you're over budget in that kind of category means that you need to think about how to rein in your expenses elsewhere so that it doesn't negatively impact you down the line. Alternatively, if this farmer had been over budget in the seeds, he or she would want to think about the seed purchasing and what went wrong that she was over budget in that category. So depending on where you're over budget will impact what types of adjustments you need to make going down the line. If you need to be reining in expenses, which ones do you need to be reining in? Any questions about this tool?
Yeah, so a couple of really quick questions, Julia. So one is a very quick accounting question. Could you briefly explain the concept of cost of goods sold and what people should use that for?
Certainly. So cost of goods sold is the cost to purchase things that you resell. So if you have a farm store, maybe you purchase some jams and jellies that haven't been produced on the farm. That's going to be the cost to purchase those jams that you then resell is your cost of goods sold. So when you look at your cost of goods sold, you want to make sure that they are less than your selling price. So it's a good number to monitor. Cost of goods sold is also one of those numbers that's very much a variable expense. So, when you set your budget for cost of goods sold, you're probably going to set it as a percentage of sales as opposed to a fixed number. Whereas, tools, you may say, all right, I've got a budget of $1,000 for tools, and it's not going to vary too much on your sales volume. Cost of goods sold really will vary on your sales volume.
Great, thank you for that clarification. And then one other quick question. We've got the review sales and review expenses and compare it to projections under the kind of monthly or quarterly managerial tasks. Yep. And curious what your thoughts are on doing that monthly versus quarterly and the kind of disadvantages and advantages of going one way versus the other.
Well, I would highly recommend doing it monthly. The longer you wait to do these tasks, the less time you have to make corrections. So if you're comparing your projections monthly, then you've only let a few weeks pass before you realize that you're totally over budget and you have time to make corrections. If you're only doing this quarterly, then 3 months can pass. You could have been over budget for 3 months, and that's 3 months where you didn't make corrections. That said, in the off season, January, February, March, if you're not doing any growing in the winter months, it may be less important to track every month. During the height of the season, it's going to be especially important. I guess the only real disadvantage of doing it monthly is just that it takes time. But once you get into the habit, it's really not that difficult. It really shouldn't take you more than 15, 20 minutes to look at it. And what it can save you down the line is invaluable.
Great. Thanks very much. All right. I think we can move on to the next example.
Okay. Great. All right. Next example. This is an annual task, and the task is reviewing the cost of production, and it's a subtask of reviewing your pricing structure. And you'll see that under reviewing your pricing structure, you want to look at your cost of production, and you also want to do a competitive analysis. And just to give you a little background on these two components of pricing structure, the cost of production tells you how much it costs to produce whatever it is you're producing. So if you're growing tomatoes, how much does it cost to grow 1 case of tomatoes? So part of understanding what you need to charge your customers is knowing what it costs you to produce to make sure you make enough money to cover the cost of production plus your overhead. The second component is understanding what your competition is charging also for a case of tomatoes. if your competition is charging $30 a case for tomatoes and your cost of production is $40 and you decide that you need to charge $50 or $60, you might have a hard time selling at that price because it's so disparate from what the competition is. So part of understanding your pricing structure is knowing your costs, but also knowing what other people are charging for similar products. So we're going to go into the cost of production side of this task, and you can see that under, right next to review pricing structure, number 10, that's going to tell us where to look in the more detailed tool. So review pricing structure, cost of production. Obviously, the reason why you want to do this is so that you understand what it costs you to produce your goods so that you can price them properly. And we'll go into the production records and the labor tracking. We'll go into that in a minute, and then we'll go through the process. So here is actually a really good example of how this ties into the operational task that you've been doing all along and how it builds on itself. So two of the things that you need to analyze your cost of production is your production tracking worksheet and your labor tracking worksheet. And I'm actually just going to go back 2 slides. And you'll see under the daily tasks, under operational tasks, second from the bottom, record employee hours for each work task. And under that it says record production data. So this is a pretty bland task under operational tasks, but it's building up to understanding your cost of production, which is a managerial task. So where do these numbers come from? So the production records are going to come from that tracking spreadsheet that you've been working on every day, recording what you're producing, recording what you're selling. You can also track it through QuickBooks. If you're recording specific sales in QuickBooks, you can look through your reports there to know what you've sold. Similarly, you've been tracking your labor on a daily, weekly basis and logging it into an Excel spreadsheet or into QuickBooks to know what you're spending on, what kind of time you're spending on the different tasks and jobs in farming. You can go to QuickBooks to see what direct expenses you have. So, for the tomato grower, what did they spend on seeds, what did they spend on stakes, and what did they spend on packaging. And then obviously the competitive analysis is the second component, but we're not going to get into that one today. So as I mentioned, you want to go back to the daily tasks. That's where where you've been keeping your records. So here's an example of an egg farmer or egg producer. And at the end of the season, they went through their labor tracking worksheet and they saw that they had spent 372 hours on various chores, feeding, etc. They spent 336 hours on washing and packaging the eggs and 24 hours on miscellaneous tasks. You'll see at the bottom I have my assumption of they assumed $15 an hour, and they sold 5,880 dozen eggs. So when you take the 372 hours times $15 an hour, they have a total labor expense divided by the number of dozens of eggs they sold is the cost per dozen for all the chores. And they did that similarly for the 3 different labor categories. They also had a tracking for how much they spent on the pullets, packaging, feed, winter supplies, coop repairs, and all the other expenses. At the end of the day, they saw that they spent $25,600 on all the expenses related to producing eggs. And when they divided that number by the total number of eggs they sold, they figured that it cost them $4.35 to produce 1 dozen eggs. So now they have a starting point for which to price their eggs. Obviously they're not going to want to price it any lower than $4.35, and they need to price it probably higher than that to cover their overhead expenses in addition to their direct expenses. and they'll want to compare that number to what the competition is charging to make sure that they're in line with the competition. And if they're not in line with the competition, then they'll need to put together a good marketing strategy to explain the value of their product over the competition. So does anybody have any questions about the cost of production tool?
So we have one question, and I know we didn't get into the competitive analysis piece of this task, but curious if you have any recommendations for searching or figuring out prices, other farmers' prices besides, on-site visits to farmers markets or farm stands.
I think that's probably the best way to do it. Sometimes it's helpful to even, go to the supermarket, see what the supermarket is charging. That's kind of a baseline, and then going to farmers markets. This is a once-a-season kind of task. It's not like you need to be going to the farmers market every week and checking prices, but, once a year, go to a bunch of different farmers markets and see what other people are charging. Call up your friends, call up the local extension, see if they know.
Great, thank you.
Yep.
One other question that just came in. So how, I'm trying to read this here. How would we figure out the overhead expenses into the price for a dozen eggs, for example? How do you allocate overhead expenses into a specific enterprise?
Well, I'm going to try and give a really quick question because I think we've only got 17 minutes left in this workshop. I usually allocate overhead as a percentage of revenue. So let's say that the egg sales were 25% of the total revenue. I would then take 25% of the overhead expense and allocate that to the egg enterprise. Great.
Yeah, and I know there are other kind of different ways to do it too, but that's the one I've seen used most commonly as well.
Yep, it's the quickest for sure.
Yeah. All right, thank you. And did you have one final slide, Julia, that you wanted to show?
Oh, yes, I do, Noelle. Thank you. So on my website, I've got some more tools for entrepreneurs, links to webinars and video tutorials, as well as some templates, and feel free to email or call.
Wonderful.
So
thank you so much, Julia. It's really, really helpful and clarifying for a lot of things that seem a little overwhelming at first, but really aren't helpful to get that clarification. So wonderful. So I am going to next turn it over to our other presenter, Dan Berube, who is a local farmer here, and Dan's going to tell us a little bit about his specific examples and how he manages his personal financial calendar for his farm. Are you there, Dan? There we go. I think you're on now.
Okay, you can hear me now?
Yep.
Great. Okay, hey everybody. So what I'm going to talk about a little bit is how you can, how I kind of apply, record keeping and build up my system. And I just want to take you through a little bit of an example of something I find is really helpful when you want to improve your processes. And that's called a SWOT analysis. This is something that they drill into your head in business school when you're analyzing different companies. But I find it to be a really useful tool for self-reflection. So if I was to do this analysis, which is SWOT is strengths, weaknesses, opportunities, and threats. So let's say that, at the end of the year, I'm looking at, my farm record keeping, and I want to say, okay, well, what did I do right, and what can I improve? And kind of going through this analysis and doing a little reflecting. So for strengths, I'm going to give some actual examples I wrote down for me and for my farm. So strengths with regards to record keeping. I'm automatically recording my expenses because I'm either writing checks or I'm using the debit card for my bank account. So I've got all that information going directly into my, into my Quicken and being recorded. So I don't have to worry about, holding on to individual receipts and making sure I type them into the computer. I take wholesale orders at the beginning of the year and I'm putting them in and scheduling them in each day that they're due, so I can pull good cash flow projections. I'll know, okay, well, I'm supposed to make these deliveries on these days, so I'll know basically when I'm getting paid. Another thing is I'm updating my sales data every day. If something changes, if I make a new sale, I'm not letting that get lost. I'm putting it in on the day that it's happening. And then weaknesses. All right, well, what am I not doing well? What can I improve? You know, when I look at my farm from last year, I was really good about tracking what we sold, but I wasn't as good at tracking what we picked, but, you know, things that we didn't sell. And that's, you know, I would mostly attribute that to, you know, rushing and not taking the time to do it. And because of that, I don't always have the best numbers when I'm looking at, okay, well, how many, you know, what was my total production of the year for a certain vegetable? Another thing that I probably could do is, you know, getting better records of the exact amount of space that I grew certain vegetables on, so I could get good, you know, dollars per square foot of vegetables planted. And then you say, okay, well, this is what I'm good at, this is what I'm not good at. Based on those weaknesses, on the things I can improve, what good things could I get out of that? Well, if I had better records of what I'm producing but I wasn't selling, maybe I'd find, well, maybe I took 20 CSA orders, but I really could have taken 30 because I have the extra inventory and I was really just being too cautious. Or maybe I can cut back on a certain product and because I don't need that much of it and I can use my land better. So those are some opportunities. Threats, you know, that's the flip side of it. You know, maybe I was missing out on some predictable revenue by not selling some product I really knew in advance I should have had, or maybe, you know, I'm wasting money on labor to pick stuff that I couldn't sell, or just wasting time in general. And, you know, these forms, this SWOT analysis, you can just Google it and, you know, I mean, that's all you need, but there's a nice little grid thing on the internet you can download as a PDF. And, you know, sometimes it's really nice if you write this stuff out and it can really help you key in on what you want to improve on. And then, you know, the second part of that is, you know, we've talked about a lot of different accounting terms today and how you want to put all this information together. But for, you know, all of us, it starts out in the field and how you track things. And, you know, we all know that we get really, really busy and we say, okay, I'm going to remember something. Goes wrong, and suddenly it's 3 days later and you just can't remember what happened and you can't piece it together. And that's why I find it's really important to generate paper trails so you have that backup. And whether, you know, and that's the thing, is you have to decide how you work. I mean, is it good for you to write notes in your phone? Do you need to email your a clipboard out into the field and just write stuff down? But it's getting in the habit of constantly generating those paper trails and then quickly putting those paper trails into the computer so you're not losing them is very important. Another thing, I mentioned it before, is how much can you do, how much can you have done for you? You know, pretty much any online banking account will let you download that information directly into your accounting software. So if you're running all your expenses through that account and either writing checks or even better, using the debit card with that bank account, you don't really have to worry about, like, oh, well, I spent, you know, this amount of cash and I have to reimburse myself, or I have to remember to find the receipt, because you're going to have that safety net. When you do catch up and download it, it's going to be right there for you and you don't have to worry about missing it. The next thing is staying on schedule. And that's a lot about knowing yourself too and how you work. And it was talked about earlier in the webinar. It's like, well, when's good for you? You know, I usually do a split shift in the field, so I'll go out in the morning and then come in for lunch and then go out in the later afternoon. So in the middle of the day, I find it's really useful for me to, you know, update that stuff. If I've sold something, I want to make the update, you know, that day. As soon as it happens, as soon as I know what's going to happen with the sale, I want to get it in the computer. And that's so that I can use the tools that you can generate with that data and that they're really accurate. Because I find it's very helpful to say, be able to pull a report and instantly say, okay, well, how many sales have I made this week or this month? And then, say it's the 15th of the month. Well, how good was I doing? Maybe I've sold $5,000 in the first half of June this year. Well, how much did I sell in the first half of June last year? And then I can just go and pull that. Say, okay, well, I'm actually $1,000 ahead, so I'm doing pretty well. What's the difference? What product did better for me this month? Was it something new? Did I expand something? So I find that if you have this data and it's continuously updated, then you can be curious with it and start running different different reports, and then you can get some real data and you say, okay, you can continuously monitor your business and see if you're ahead. That's good, and you can figure out, okay, well, I'm ahead and this is why. Or if you're behind, that you can also figure out why and then try to catch up, because you should always be setting those goals of, all right, well, how can I improve and grow sales and monitor my expenses better? And that's kind of the third thing, is that constantly setting and checking goals. You shouldn't be afraid to look at where you are month to date, quarter to date, year to date. You've got to, if you're going to be a farm business owner, you have to get really comfortable with pulling those reports constantly. I mean, I find that, I like to update my sales stuff every day, and then Saturday is kind of my big day to say, okay, well, what happened? Let's reconcile all the bank accounts. Let's make sure everything got recorded and I didn't miss anything. And let's start pulling some reports to see really what's going on this month or what's going on this year, so that I can check them against my season-long goals. Because if you're doing that every week, if you're in the habit of that, it gives you some incentive. It's always present, and it's a driver, and it can get you to those goals. And I find that, for me, I find that to be really, really important, and it helps me to improve. It's like, okay, well, if I could just, maybe it's you don't want to get to a certain round number in the month, and you can say, okay, well, if I just, can find an extra $500, I can get to where I want to be this month. And you're not going to get that if you don't have data that is accurate, that's being updated constantly, and that you can easily use. So that's, Noelle, I think that's about it for my slides. Do we have any questions or what?
Yeah, thanks, Dan. Okay. So it sounds like you actually do some of the tasks that we have on the financial management checklist.
Sure.
Under monthly or quarterly. It sounds like you actually do a lot of those on a weekly basis, even more often than is recommended on the checklist. Is that right?
Yeah, I would say that certainly I'm doing some of that stuff more on a weekly basis. I really like to have my head in the game, because, like I said, the sooner you know, the sooner you can adjust, and every farmer knows that conditions are constantly changing, and we have to adapt on the fly, and that's one of the trickiest things about farming.
Yeah. What about the more of like monthly or quarterly managerial tasks, like Julia was talking about, comparing projections against actuals? How often do you do that?
I do try to do that at the end of every month. Is once you have the final data for the month, then I really like to do that analysis. I would say at this point, because I'm only a few years in the data, I really prefer to go off of more what I did that month last year. It's sort of more as a comparison with the past, more than going forward for the future, if that makes any sense.
Right. So looking historically as well as your projections.
Yeah.
Although in theory your projections were based on historicals, correct?
Right. Yeah. That's totally true. Yeah. I guess I always look at that. It's like, well, what did I do last year? It's always sort of my baseline of like, well, I at least want to see that I did that, because those are real numbers, and projections are great, and we should all be in the habit of doing projections. But every business owner knows projections are they're subject to change based on the new data that we get.
Right. And one other question, Dan. So you're in your third growing season now, right?
Right. Yes. So
how long did it take you to kind of like set up this system to make it work for you? Was it a process, or was it kind of like you just sat down and kind of really thought it out in one weekend? Can you talk about that a little bit?
Sure. I mean, I think it really evolved in the winter of the second, going into my second year. I mean, I was tracking everything. I was still using the same program in the first year, but I found that how I entered certain things or how I was recording certain things wasn't always the best way to do it, especially when it came to getting comparisons. Like I was, just certain things like recording sales and making sure that they were in the right time slot wasn't always happening. And when you don't do that, you can't get the accurate comparison. So it was really sort of that end of the year thing after my first year, and I did, that kind of big picture of like, okay, well, what worked for me and what didn't as far as this data. I was pretty familiar with the program. It was just more about like how I formatted the data and what things I was keeping track of and how I was categorizing it. And then I think by the middle of last year, I was really into a groove with it and felt really comfortable. So it probably took me a growing season and a half to feel like it was really clicking.
Great. Okay. And then one other question. So if someone asking what program do you use, I think what they're asking is what software do you use for accounting systems?
Sure. I use Quicken Home and Business 2014.
Okay. And is there a reason you chose that one over something else? You're just more familiar with it?
Well, I was already using it for personal finance, and I also do the bookkeeping for my wife's business. So, I was already very familiar with that program. So it was just a matter of adding the farm to the portfolio of things I was keeping track of. I think it's a really simple, it's a really simple program to use, and you don't need much accounting experience to use it. And I find it's great for the level that I'm at. I think if you had a really if you were dealing with huge inventory numbers or big pieces of equipment that you really need to track, maybe it wouldn't be the best. But if you're more cash-based, I think it's going to cover your needs pretty well.
Okay, great. Good suggestions. And then one final question for you, Dan. With respect to kind of the more big picture annual managerial type of tasks, Julia was talking earlier about reviewing pricing structure and confirming that your prices cover your cost of production plus overhead expenses, et cetera. And curious if that's something you've been able to do yet, just 3 years in.
That I think that's one of the things that I've struggled with a little bit, because it's how do you assign stuff. I mean, I tend to look at it, since I'm just a vegetable operation, I tend to look at it all as one big operation and more just the health of the overall business versus like, okay, well, tomatoes cost me this much to produce versus, peppers or onions or anything else. I haven't dug down that deep yet.
Okay.
It's that question that kind of came up earlier. It's like, well, how do you assign overhead? I certainly track sales by each item and seed costs, but I haven't found a great way to allocate expenses per item, because there's certainly some, there's some where you could easily, the overhead stuff you could easily allocate as a percentage of sales, but some things like row covers, it's like, well, I only use them for certain plants, and other ones they don't count. So yeah, I mean, that's something that's on the to-do list that I have to figure out.
Not an exact science yet, but getting there.
No, not at all. I mean, it's still kind of putting it together.
Great. Okay. Yep. Awesome. Well, thank you so much, Dan. It's really helpful to hear some concrete examples. And if anyone has any other questions, feel free to chat them to me. I am going to just finalize the webinar here and our last slide here to give you guys all the contact information for the Carrot Project. If you've got any questions about the tool specifically or about Carrot Project's programs and available services, this is their contact info, and Evie Toland is their awesome fellow. Her email address is there. Feel free to reach out to her. And if you have any questions about New Entries programs, our contact info is there as well. And also wanted to point out that there are a lot more awesome resources with respect to this type of thing and many others on the Carrot Project's website as well as on New Entry's website at these addresses. You are all going to receive an email from me either later today or tomorrow with a follow-up evaluation. Would really appreciate it if you could take a couple minutes to do that. And we will also include live links to all the things that you saw in the presentation today as well. And the email tomorrow will also include a direct link to the recording of this webinar. So thank you all very, very much for coming, and I hope it was very useful, and we all hope to be in touch and work with you soon. All right, thank you.